Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. The big longer-term pattern here continues to be the shallow, bright red July 2022 to October 2023 bullish shift pitch hook. We are right now a little underneath the overhead middle tine, currently at 99.76. The lower tine had been tested over the turn of the year and had held. Now it seems the middle tine is to be tested. We also have the often previously highlighted congestion zones and areas. These are the oft-mentioned congestion area between 93.95 to 96.06, where we had been until last week. Then below the small congestion bands between 91.83 to 92.11, and between 86.65 and 86.86. Late last week we entered another congestion band, one that starts up at 97.51 and stretches up to the March 2011 high at 99.95. So far the market is working its way slowly higher through this congestion band. Then there is a newer pattern, the dark blue late December 2024 to the start of February 2025 bullish Andrews pitch hook. This still hasn't really been tested on the outside, but it does show off the late December to date bullish angle of attack quite well. We're right now in between the middle time below, which is currently at 97.62, and the overhead upper time currently at 10.042. Overall, even now the price is moving higher, all these actions have led to a mainly sideways market within a very wide range of about 8800 up initially to the 9600 area, but now on the wide from the 8800 zone below up to between the overhead congestion area 97.51 to 99.95 and the 2011 high at 10.180. So what should we look out for in the future? Well, keep an eye on the dark blue late December 24, early February 25 bullish Andrews pitch hook. It seems to be the showrunner for this year right now. Additionally, the bright red middle tine, and that's overhead the congestion area we are within, as already mentioned, as well as the 2011 high overhead plus the congestion zone below between 93.96 to 96.06. LME 3-month aluminium. There are a number of patterns here, one within another, all happening at the same time and all affecting the market, though I suspect some are coming to a cusp and may soon become redundant or even retired. One that falls within this category and has been on the brink now all of this year is the very large and often mentioned purple tines of the mid-December 23 to late July 24 bullish Andrews pitch hook. We are still at this time sitting just above or just below or right on the lower tine, currently at 26.80. After over the course of this year breaching, possibly breaking and fake breaking below the lower tine a number of times, though seemingly always reverting back higher. Today we are testing below it again. We also have for the same time period a bright red shallowly bullish shift pitch hook, and here we have seen prices starting to establish themselves over the middle tine, currently at 26.25, after pressuring it since at least September last year. Looking below, we have the support, quite good support actually, as seen throughout February and now March of the mauve medium moving average, currently 26.16, and now seemingly reinforced by the rising green short medium moving average, currently 26.29, which together formed a pretty shabby looking golden cross 2 weeks ago, which is a lagging indicator. Additionally, prices last week and this penetrated, though seemingly failed to establish themselves over the recently formed and very shallow dark blue bear channel, currently 24.50 to 26.85. The topside had earlier been breached 4 weeks ago, but it was with a short sharp move higher that became a pipe top with only the one close outside the shallow dark blue bear channel. However, this recent push upwards 4 weeks ago, plus the very recent push higher over the last 2 weeks, seem to be a more concerted action, has given us a new pattern development which I highlighted last week. A bright green mid-January to date bull channel, currently 26.18 to 27.59. I shall once again for a second week watch this one carefully, As overhead, we have the continuing resistance of the April 2018 high at 27.18, which still looks good, then the big old 50% Fibonacci line of the November 2015 to March 22 move at 27.99. Please note this area overhead had capped prices since at least July 2022. LME 3-month lead. The key features in this market, and some of them have been here for a while, all relate to the very large descending triangle, possibly a descending wedge pattern, highlighted on my daily chart with an early July 24 to early March 25 purple downtrend, currently at 20.03, and below by the bright red early August to late December 2024 head and shoulders neckline, currently at 19.52, though it could also be the dark blue neckline extension, currently 19.08, to the July 23 to February 24 head and shoulders continuation pattern. 2 weeks ago, prices broke higher out of this pattern, and last week they broke higher over the nearby gold long moving average, currently at 20.50, and have carried on higher this week. Now, the declining gold long moving average is only the first real big resistance the market has encountered on its way higher, and we have more overhead, notably the 50% Fibonacci line of the March 20 to 22 move at 21.35, which also sits with other congestion between 21.35 to 21.38. Then, apart from the early October 2024 high at 21.67, we have a fairly clear area until the 21.85 area, which is a congestion area of lows from early 2022. Nevertheless, I laid out last week some opportunities for this break higher out of the descending triangle, come descending wedge pattern. As a sort of a primary target X up in the 22.09 area above, the secondary hard to reach target X1 further up in the 23.20 area. Okay, so let me once more try and quash your hopes with my final point, and has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year should be seen in the shadow of this bearish longer term pattern. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.